Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we looked at the Consumer Price Index and what this tells us about price pressures in the economy. In today's lesson we're going to look at another market moving indicator which gives us insight into a large asset class in the economy, real estate, and the indicator is referred to as the Existing Home Sales Index. So let's get started.
Okay, so the existing home sales report is released at 8:30 a.m. Eastern Standard Time in the fourth week of the month, and it's designed to cover the number of existing homes closed during the previous month and the average sales prices by region of the country. There's three important numbers released in the existing home sales report, which are the aggregate number of homes sold, the median selling prices, and the month's supply, which represents the inventory of unsold homes on the market and gives insight into what to expect in the future for the first two numbers. So basically, if the month's supply is rising, then that would be an indication that supply is rising. Prices should fall to bring that inventory down, and vice versa. If supply is shrinking, then prices you're most likely to see that median selling price number start to rise. So, like most indicators, the number is provided raw and with seasonal adjustments to account for the changes in weather, which especially here in the housing market can have a large effect on the number of homes sold in a particular month, particularly in the colder months. I know from my real estate buddies and from watching this number, people don't like to get out and buy homes, but during the summer months, those tend to be the hot months, I believe. So, in addition to the obvious importance to the stock of home building companies, home supply stores, real estate companies, these types of things, the existing home sales number is also considered a leading economic indicator, as increases or decreases in the number of homes sold lead to economic activity in general, lead economic activity in general by several months. So when housing sales are strong, and prices are rising, then homeowners, which represent a large part of the economy, show increases in equity in their homes, which can then be spent through home equity loans or used to upgrade to a larger home, all important drivers of economic activity here. So basically, let's say I buy a house for $500,000, and then the value of that house goes up from $500,000 to $600,000, then I can pull that extra $100,000 out of the house with a home equity line and either spend that money, or I can roll that that equity, sell the home, take the profit of the $100,000 and get a bigger house, and then I'm going to buy new furniture, and it's just that's a big driver of economic activity in and of itself. Okay, so you have a lot of strength or weakness in the economy, and especially we're seeing this right now is another, it's a great time to be doing these lessons because, the housing market is where all the focus is right now, and this is one of the reasons because, prices have risen so rapidly in the past and people have pulled all this equity out of their homes that, people are worried now that, the housing market is stagnating and housing prices aren't going up anymore. What's that going to mean for consumer spending? Because people aren't going to have the equity to pull out of their house, and then what's that going to mean for the economy? And this is why we've been seeing some large stock market sell-offs, in addition to all the problems with subprime, which I've done lessons on there as well. Okay, so as with the other leading economic indicators we've looked at, this indicator will be looked at even more closely when the economy is thought to be at a turning point, and market volatility can be particularly large as a result. And especially when housing is a big focus in the economy like it is right now, you can see some pretty major market moves around this number. So also, with the other indicators we're looking at, the best way to learn how to anticipate market reaction under different scenarios here is to follow the several releases of the indicator in real time. So as with the other indicators we've been studying recently, I'm going to be posting a discussion piece in the comments section of this lesson on InformedTrades.com after the next few releases, so we can follow and get to know this release there. So if you're watching this video on YouTube, I've included a link to the lesson in the description section there, so you can have that. I've also included a link to the latest report, latest existing home sales report, below this video if you're watching on informedtrades.com, or in the description section if you're watching the video on YouTube. Okay, so that's our lesson for today. In our next lesson, we're going to look at one final leading economic indicator, which gauges the consumer's opinion on how the economy is going, which is called the Consumer Confidence Index. So we hope to see you in that lesson. As always, if you have any questions or comments, please feel free to leave them in the comment section below, and good luck with your trading.